Hey everyone, and thanks for jumping back into the Cryptoverse. I figured we would go live. We are now below 21K, so we did take out, I believe we took out the low in February. Take a closer look here in a minute. Let me just post this in the Telegram group and or on Twitter as well. All right. So Bitcoin is now below 21K. I believe this is looks like we took out the February low. Okay. So I mean this is a great example, right, of how we're gonna get, both sides wrecked this year. We spent January and February getting the Bears wrecked. Now we're getting the Bulls wrecked for a little bit. And I mean, it's going to be a brutal year in terms of apathy setting in and in terms of time based capitulation. The time based component is the hardest part, right? Like, price dropping can be difficult, but like if Bitcoin had started its bear market and then just dropped 80% in a day and the bear market was over and we just trended up from there, it would actually not be that bad, right? Like, yeah, it would suck that it's down 80%, but hey, then you start going back up again and everyone gets happy. So the harder part beyond price-based capitulation, as we've said many times, is time-based capitulation, right? It's so difficult to sort of navigate the time-based component. And I think the reason is because, you sort of see the price go down for a while and then it just doesn't go anywhere for a while, or it puts in a new low, or it puts in a lower, or it puts in a lower low, or it puts in a double bottom, or something like that. But it's very difficult because everyone wants just the prices to go up. But as we've said, 2023 is going to be a good year, I think, to wreck both sides, the Bulls and the Bears. Again, we started off the year by wrecking the Bears. It appears that it is the Bulls' turn to get wrecked. In fact, and try to sort of see past some of this stuff in the short term. I would guess that by the end of the year things will start turning around in a more sustained way, right? I'm not gonna say we can't pump back up. Of course, Bitcoin could go back up for a while, but I'm not in the echo bubble camp or anything like that. I think that the hard part for this year is just going to be, as we've previously discussed, the time-based capitulation component, which is always the hardest part. And by the time you get out, imagine 6 months from now, it's just going. I imagine it'll be fair. The cryptoverse will be fairly apathetic. But remember, markets bottom on apathy. That's what they bottom on. They don't bottom when everyone's tuning in. And so I think it's fairly likely that you're going to see a lot of cryptos put in new lows, especially the altcoin market. We saw similar things in 2019 and 2020 where these altcoins went and put in new lows. Even after 2018, you're probably going to see something very similar this time around as well, as my guess. Why should it be any different? I don't think that it will. The sort of the things I think to take a look at also is the fact that the S&P is now back at its 200-day moving average. So as you guys are aware, I'm in the sort of the continuation of the bear market camp. With the stock market, one of the things we know is that bear markets that do not include a recession tend to last about 9 months, which is about how long this one lasted if you just take it from from early 2022 until October. So that's a pretty standard bear market that you saw right here. The question that you have to ask yourself, well, is it a pretty standard bear market? Like, is it just going to be a bear market without a recession? And there's a lot of leading indicators that would certainly point to a recession is coming. Now, I've said before that the recession has not yet been here. You still have secular lows in unemployment, and you're still looking at a lot of metrics that, while they seem like they're kind of bad, they're not bad enough to merit a recession. Just because you're not in one or at least just because you haven't been in one for the last year, doesn't mean it's not going to eventually resolve to ending up in one, right? It's what the yield curve inversion would point to. That's what a lot of different indicators would point to. Look at the slowdown in the housing market. Um, so the important thing I think to remember is one of the most common reasons why someone might say we're not in a recession is you say look around, right? Restaurants are packed, businesses are doing great, the unemployment rate is low. But remember, by the time you see it in the economy, by the time it's obvious to everyone else, right? So it's obvious, it seems obvious to us, right? Because you're following financial markets and financial markets are forward looking. But by the time it's obvious to everyone else, what happens, right? I mean, like, yeah, then they'll call it a recession. And then they might say, oh, well, it's a recession. Stocks are going to keep going down. But in reality, a lot of times stocks bottom before the recession is over. And also remember that recessions are usually declared in retrospect. So by the time they actually declare a recession, the market could be trending back up in a sustained way. Markets don't need to see the economy at its worst to bottom, right? They don't need to see the economy at its worst. What do they need to see? They need to see a path out of it. And if the stock market can see a path out for the economy, then I think that's arguably what's a lot more important than just how bad it gets. So, my guess is give it a few more months. You're likely going to see some of the leading indicators continue to weaken, and the Fed's going to take their foot off the gas for a little. They won't continue to tighten forever. I do think they will go a bit further. You're likely looking at at least 5.5%. I mean, they could go to 6% depending on where inflation comes in. But I do think that the sort of this left tail risk that we've discussed for half a year of the reacceleration of inflation, I would argue that the reacceleration of inflation is actually going to be transitory. I think it might last a few months, but by the time you get into the latter half of the year, which cyclically as well, based on last year, should be pretty good for inflation in terms of coming down, you couple that with a potential recession, which are notorious for bringing inflation back down to earth, I think you're going to see disinflation, right? So yes, we are experiencing we are experiencing what I would say is temporary reacceleration of inflation, which is the left tail risk that we've discussed for like the last half year. As once you see the reacceleration of inflation, that's when you're going to see risk assets start to get weak again, and then from there, you'll see that likely play out over the next couple of months or so. But then I think you're going to see disinflation via a recession later this year, is my guess. Early next year at the latest is my speculation of the dubious variety, right? So later on this year, early next year at the latest is when I think you'll see disinflation and actually a more sustained way. But I do think it's going to come at the cost of jobs. Okay, I'm not under the illusion that just because the unemployment rate is at a secular low that it's going to stay that way forever. Historically, that's exactly what happens, is that the unemployment rate goes to a secular low, and then it sort of, that is part of the reason that the Fed gets so hawkish, right? Is oftentimes it can put upward pressures on wage inflation, but usually it sort of goes down to these low levels before starting to go back up. So I think that you're likely going to see this left tail risk that we've discussed of temporary reacceleration of inflation. I think it's going to be somewhat transitory. It might last a few months at the most, and then it'll come back down. But the hard part, and it's the tough pill to swallow, is that the reaction by the Fed is what's more important. Okay, so despite the likely outcome of disinflation in the latter half of this year, it's likely not going to change the path as to what the Federal Reserve is going to do over the next few meetings. And because of that, look, it's not something that you have to necessarily think that it makes sense. It's just, it is what it is, right? We don't need to spend so much time thinking about what the Fed should do. It's more so, what do we think they're going to do? And if we think they're going to continue to tighten into a slowing economy and using the justification that inflation is temporarily reaccelerating and that, inflation, the good data from inflation back in the latter part of 2022 was actually revised away, and you sort of come to the understanding that the Fed is going to likely hike us into a recession. That's sort of the important point, right? That's the sort of the point that you take away from it, is like, well, what normally causes recessions? It's normally the Fed being overly hawkish and pushing us into one. And you might say, well, how does that affect? I mean, what does that mean for financial markets? Well, remember, the bottom for risk assets in general when it comes to a recession can often be, during the recession. By the time it's declared, by the time it's eventually declared, the bottom could be in, right? So I think that, while I know apathy is setting in for a lot of people, I'm not under the illusion that it's not. While I know apathy is setting in for a lot of people, I think that, I think this is, the next 6 to 9 months is where you really have to pay attention. And it's going to be hard. I didn't promise it was going to be easy, right? It's going to be hard. But if you can get through it, then I think you're going to look back and you're probably going to be a better investor for experiencing this time frame. You'll probably be more risk averse in the future, more like maybe not as risk averse as me, because I feel like I'm a little bit over the top sometimes. But I think it does make people better investors to sort of experience these bear markets and the brutality of them. One of the interesting things of this S&P bear market, and I want to draw your attention to this because we're coming up on sort of an important juncture here. If you look at the S&P bear markets within the context of history and look at the extremes that sort of confined prior bear markets, what you'll notice is that we're actually right at sort of the prior extreme of what prior bear markets were able to accomplish that still ended up just putting in new lows. So, and it's coincidentally coming at a time when it seems like the Fed is maybe pivoting, but not to QE, but to being more hawkish. And so, if that is the case, and the S&P continues to roll over here, and you come back in, remember the average length, I think, for a bear market that includes a recession is maybe around a year and a half, plus or minus a couple months or so. So if you do see something like that and you see the S&P put in new lows, let's say like mid-year or Q3, Q4, something like that, then that would actually be a fairly average recession, like bear market recession combo, right? Now, one of the common things I feel like I have to address, at least on Twitter anyways, YouTube's a bit better. Twitter's a bit more, let's just leave it at that. One of the things I have to address oftentimes is, well, haven't we been in a recession? I mean, look at the stock market. Look, guys, we've had plenty of bear markets that are not recessions, right? I mean, like, think about 2018, right? We didn't have a recession in 2018, and 2018 still stopped. I mean, it still sucked for crypto, and it was difficult for risk assets as well, for equities as well. So you can have a bear market without a recession, but you can't really have a recession without a bear market. So, so you have to remember, like, just because you can have bear markets without recessions, that the stock market can weaken because things are overvalued, and the economy doesn't have to go down the tube. But if the economy does go down, the stock market usually sniffs it out before it happens, and the stock market normally front runs it, and then by the time it's obvious, the market's probably already bottomed. So I think you have to look at that within the context of history. And if you also if you overlay this with actually the .com crash, this is actually where it rolled over. In fact, right around the time that it rolled over and began the descent into new lows that took us out to about the 545 day mark. Right now we're at around the 420 something day mark. So, that would be what, another 3 months would get us to probably about 4 months or so. So about 4 months, if the market rolls over, like for the next 4 months or so, like as you get out into summertime, that could mark sort of the a comparative low on the S&P compared to the dot-com crash. If you want to look at it in terms of the 73 to 74 bear market, a period of high inflation, we'll take a look at that as well compared to this bear market. And this is where we currently stand. That would be what I would call a hard landing. Okay, so if you get a hard landing, that's where the the people that have stacked cash can really benefit, really benefit, right? If you get a soft landing, like 46 to 49, the heavy cash people don't benefit as much, right? I mean, it's just the truth. It's just the truth, right? If you get a soft landing, being heavy cash isn't going to have benefited you nearly as much as if you had got a hard landing. We don't know what we're going to get, but watching the money supply shrink, watching the Fed hike into a slowing economy, it is something that I think you have to plan for, even if it doesn't happen, right? Anyways, right now Bitcoin's coming in at around 20.8K. The 200-day SMA on Bitcoin is at 19.7. Furthermore, if we take a quick look here at the bull market support band, you can see that it's ranging from around 19.7 up to around 21.2. Remember, the first test of it historically does not hold. Again, like, this is one of those things where I wish I could paint a more rosy picture, and it's always possible that it holds, right? I mean, hey, it could hold. Okay, history says it's more likely not to. I mean, if you just look at the context of history, normally the first test does not hold whenever it happens, and we've sort of experienced that multiple times. So I would lean towards it's more likely not to hold, but it doesn't mean you can't bounce around. I think a lot of people get frustrated when Bitcoin, puts in these little rallies. But remember, think about it like this, okay? If you're pro crypto, like if you're pro Bitcoin in general, and you think, okay, well maybe it could go retest the lows, maybe it could go put in a lower low, you're still likely long-term bullish if you're watching this channel. Otherwise, I mean, what are you doing? You're just watching things you don't care about. So if you are pro Bitcoin over the long haul, which I imagine many of us are, you have to remember that, like, it probably, I mean, it should come back, right? It should come back eventually, but we also know that 2015 was brutal. We know that 2019 was brutal. 2023 is probably going to be brutal too. Doesn't mean you can't make money if you're like a swing trader, but I'm not. That's not me. I'm a fairly risk-averse investor who has mostly stuck it out in fixed income investing over the last year, because I don't care about bear market rallies. I think it's just important to remember that that it is a pretty normal part of the market cycle, and it's happened before, probably going to keep happening. Okay, so right now Bitcoin's at 20.8. Historically, we don't hold it on the first attempt. That doesn't mean we can't bounce. If you like Bitcoin, and you think that it could go lower, and you're getting frustrated by all these bounces that we've had over the last year or so, just remember, like, the longer it holds at some higher levels, at least it's making it through the Fed rate hiking cycle still at these high levels. I mean, like, at least it's not at 50% of this at this phase. So it is. I mean, the fact that it's still at 20K is it's something. But with that said, we've talked about the downside risk. I'm not here to tell you things I don't believe. And what I think is that I think it's going to be a difficult year, both for the bulls and the bears, because even though the bears could ultimately say, well, look, it was we eventually did come back down, which is the camp I'm in. Certainly the path to get there is quite long and brutal, and can sort of test those convictions. It's interesting. We talked about this 60% rally into the 50-week even last year. Even last year we talked about it in comparison to the dot-com crash. And one of the things I said back then was, just imagine how brutal a 60% rally would be, because we also know it's going to correspond to the 4-year bottoming cycle for Bitcoin, right? So, like, imagine how brutal it would be to get that 60% rally off the low into the 50-week moving average, and the idea that it's going to test everyone's conviction, right? And I think it did. Like, I think it has. But, at the same In the same way, we know that this is what happened in .com. We saw the 60% rally after a 77% drawdown into the 50-week moving average. We saw a double top. We saw a double top on the weekly RSI. It's just the same thing. I mean, I think you make the case that it's just our .com. You know, I think it's just our .com, a .com 2.0, if you will. Why not, right? I mean, why not? And frankly, it's not a bad thing. You know, again, if you're an investor, you know, I think about my investing career, and I didn't get out. I mean, I wasn't really investing until I was at least out of high school. So I mean, I completely missed the .com crash. I completely missed it. I graduated high school in '08, and then I went into college, so I didn't really have to worry about the workforce and all the difficulties that would have come with getting a job during the financial crisis. But one thing to consider, you know, you might look at this, you know, you might look at things like the Nasdaq, and say things like, you know, like, gosh, it would have been brutal. But like the opportunity that people would have had down here, is just immense. You know, it's generational opportunities, and it doesn't come around very often. Had you missed this, you would have had another chance to sort of load up at slightly higher prices. So you had one chance, and then you had another chance about 7 years later at not very, very much higher prices. But you see what came after it, right? And these moves, right? These moves are what you look for. You know, a 2,000% rally over a long period of time, and that's when you can just get into more passive investing and, you know, like just, all right, well, the market's going to generally trend higher. It collapsed, but we still think tech stocks are the future. We still think the internet is the future. Therefore, it's likely going to go up. Okay, so yeah, it sucked for a couple of years, right? It sucked from April of 2000 or so to September of 2002. Think about that for a minute, right? Just think about it, okay? So think about it. April of 2000, okay? September of 2002. How long was that? So if you take it, about 130 weeks, okay? 130 week bear market by the Nasdaq. 130 weeks. It was brutal, I'm sure, but you can't really appreciate it if you didn't live it. I'm sure there's some people here in the chat that lived through it, and I'm sure they would have plenty of stories to tell. Maybe tell a story in the comment section. But I can tell you one thing, like if you didn't live through it, you don't appreciate this. You don't appreciate how difficult it must have been to live through those bear market rallies and you know, retain the conviction that it could easily go lower. You know, how many people would have said, you know, who bought the dip? You know, who bought the dip? And the dip just keeps on dipping. So 130 weeks. Very similar time frame, right? And we're talking April of 2000 until September of 2002. Why is this relevant? Well, let's go take a look at Bitcoin. Let's not. Let's go take a look at total market. Total market is what we're going to look at here. Okay, so April 2000, September 2002. Now, if you follow this channel for any period of time, you know we've talked about the indicators. You know we talked about the peak. You know I'm sure you've heard from anyone that the April peak was more spectacular. Let's just look at it for Bitcoin. The April peak was more spectacular. Okay, now, at the end of the day, 20 years from now, if you tell them the peak of the bull market was in April, they're going to laugh at you. Okay, I'm going to say, what? You're just going to ignore the move to 69K? They're probably going to laugh at you. Like, imagine if you were looking at the NASDAQ and the price over here went and put in a new high, and then people told you that the bear market started here, right? It would have been like, well, what are they smoking, right? Like, what type of, rationalization is this? Be that as it may, let's just pretend, okay? Let's just pretend for a minute. April of 2000, right here. So you have April of 2000. And then here with Bitcoin, You have April of 2021. Okay? That's when it peaked. Sorry, I don't know what's going on here. April 2021. So, separated by 21 years. You had the dot-com crash. You had the dot-com bull. You got the crypto bull. You have a 77% rally or 77% drawdown into a 60% rally to the 50-week. Where did it end? 130 weeks later, in September of 2002. So, if you take it from here, it's already 99 weeks in. Okay, this was 130 weeks. 130 weeks. This is 99 weeks. 130 weeks would, of course, put you right around the same time. September, October. Okay. So you're talking about a very similar type of move. So it would be, of course, 2023, which is, so it'd be about half a year from now, would it not? It'd be about half a year from now. So I think you at least have to consider it. Like, I'm not saying you should take it to the bank. I know they're not going to cash it in, so don't even ask them to. But it's probably something to at least, consider, right? Now, I'm trying to find, so let me pull this up. So we talked about this before. So if you go look at total and you overlay it, right? You overlay this same, this Wall Street cheat sheet, if you will. Oops. So if you overlay the Wall Street cheat sheet over the bubble that we've been experiencing this time around, at least, you can of course see the similarities, right? And I'm not saying it's like an exact match or anything, and there's certainly different ways you can sort of draw this out, but if we are just simply going to sort of bleed in here, like that would be representative of sort of this, right? Be sort of representative of that, which for total would basically just bring it into that range I have it on total too, but you get the idea, right? It's the same thing. It's the same thing if you look at total in general. It's the same type of idea. Okay, so the point is to simply say, well, if this plays out in the same way, then it's just essentially your .com 2.0, right? Now, just because you have a crash like that, it doesn't mean crypto is not the future. Just like it didn't mean that it didn't mean that tech stocks weren't the future. Imagine telling someone back over here, like if you were an investor back in 2002, okay, and this is what you saw on the chart. This is what you saw. Imagine what you would have, how that person would have felt if you could have shown them what would have come. So I do think that crypto will recover. I think sometimes it just get labeled a perma bear because I've just been bearish, but I think crypto will recover, but it's just like, this is our .com. It's a brutal process, and I kind of think it's a necessary process to get all the garbage out of the space, and it's brutal. But if you sort of line it up, it seems like, look at that, September 2023. So you could make the case here that around September, the market will slowly start to turn back up. Now, the tricky part, though, is even if it turns back up in September or October, no one's going to believe it, it would take forever for people to believe it. And I know there's some people that think that about this situation right now. And, of course, you could be right. But given the macro headwinds, given the fact that the Fed's raising interest rates into a slowing economy, given the inversion of the yield curve, the secular lows on unemployment, which typically precede a recession, amongst other things, I think you make the case that we're still likely going to see continued weakness for a while. Now, by the time you get out 6 months, okay, you could be looking at, at a Fed pivot in sight. Okay, they probably already paused at that point, so you could be looking at a Fed pivot in sight. So it's something you have to think about. I don't look at this chart and get fearful of this type of a move for crypto. I'm actually somewhat envious that there are some people that got to buy down here. Okay, so the same thing with crypto. We've talked about worst case scenario is crypto going to 400 to 500 billion. Right now it's at 928, which means about another 50% correction could be about the worst case scenario that at least I could imagine. And if you see that, it's not. I wouldn't treat it as the end of crypto. I would just say, hey, it's our .com 2.0, and it's time to start going back up. But I think you're still going to see this year wreck both the bulls and the bears. Now, so far, it's wrecked the bears. Okay, we had January and we had February. Bears got wrecked both months. March, it kind of seems like the bulls are going to get wrecked, right? Like it kind of seems like that, does it not? I mean, unless there's some massive move back up to the upside, but it seems like, sorry, I'm on equities. It certainly seems like that March is going to be, hey, time to get the bulls wrecked for a little while. Same thing could be said about April and May and June, and maybe there's a couple of green months in here. Maybe September is red like it usually is, but then by the time you get into October, November, December, it could turn back green. Just like the Nasdaq, right? I mean, like look at what the Nasdaq did back then. So you can see after it bottomed, you had October, November were green, and then December was red. But again, you sort of finished out the year, you finished out the quarter somewhat strong, okay? And you got 2 green candles in the fourth quarter of the year. We already have 2 green months, okay? So let's suppose that Q4 gives us 2 green months as well. That's already 4. You throw in 1 or 2 more green months somewhere in between, and then everything else likely red. And then you get your year that sufficiently wrecks everyone, wrecks the bulls, wrecks the bears. The bears might say they're right? I mean, of course, like if we go put in new lows, I will very much like that, to be completely honest, because I'm cash heavy. But the path there would have been quite difficult. And frankly speaking, I mean, any trader who's good at trading bear market rallies would be like, well, you sit in fixed income for a couple years, but maybe they made money trading the bear market rallies. I'm not that good at that stuff, so I'm not going to pretend to be. I'm just going to sit over here in fixed income investing and leave the bear market trading to the experts, right? So that's sort of the path that I sort of foresee here for crypto. I think it's a fairly good odds of something like that happening. It's always possible that you just see a capitulation too, rather than a slow bleed, but it might just be a slow bleed. I mean, we didn't really have a blow off top, so it might not be a capitulation bottom. It could just be sort of a slow and painful bleed. And we mentioned this back at when we were at 25K. We put out a worst case scenario video, and in that video, we said, look, guys, it's the same thing. It's the same exact thing that we saw in the .com crash, the 77% drawdown followed by that 60% rally. And then the question is posed, right? Well, what if it's just a slow bleed from here? What if it's just a slow and painful bleed back down? Now, if you really look at the Nasdaq, it was not linearly down, right? Like it was more stochastic, right? It was all over the place. If you look at these weekly candles, look at this. I mean, after it had its double top at its 50-week SMA, you had 1, 2, 3, 4, 5, 6, 7 red candles, then 2 green candles that got you right back up, and it wiped out the last whole month basically of red. Okay, so Bitcoin right now, it's in its 3rd weekly red candle. It's always possible that it just bleeds here for a few more weeks, and then people get spooked, and then Bitcoin rallies back up, back up to the same level or higher than it is today, just like it did with the Nasdaq back then, right? But then, of course, it could just continue to roll back over, and then you sort of get these intermittent pumps, right? You got a 2-week pump here, you have a 2-week pump here, a 2-week move here. This was a 1-week move, but almost a 2-week move. This was quite the wick there. And then a 3-week move. None of these marked the low, right? And then finally, the low was in. Okay, by about, look, I mean, it was in September, October. Really, it actually looks like it came in October. I know I said September earlier, but it looks like it actually came the first week of October is when the low was finally put in for tech stocks. And it lasted about 2.5 years. If you measure Bitcoin from April of 2021, you know, we're already 2 years in almost. I mean, next month is 2 years. Okay, so then 6 more months after that gets you to that 2.5 year mark, just like the NASDAQ, right? Just like the NASDAQ did during the dot-com crash. It would also happen to correspond to, a pivot in sight. It would also happen to correspond to the Bitcoin halving in sight. And it would also correspond to just in general the 2015, 2019 years of, hey, let's get both sides wrecked. And then once everyone is sufficiently wrecked, then we go back up. Take a look at year-to-date ROI. Okay, so year-to-date ROI is always interesting. And one of the reasons I like year-to-date ROI is because, frankly, 2014 and 2018's average basically told you more or less what was happening in 2022. I'm not really sure why it's not loading. Let me try to reload this here. But yeah, I mean, here it is. 2014 and 2018 average. So here's 2014, 2018. You take the average of them, right? So take the average of 2014, take the average of 2018, you add that series in. Now you hide 2014, you hide 2018, you just look at the average, you compare it to 2022, and it was basically right on top of the money, right? Basically the exact same thing, okay? And it ended at that same level. Now you take 2015, 2019, and basically what you saw is a drawdown of 25% to the downside, maximum upside of I mean, at least for Bitcoin, it was around 3x or so, maybe a little bit higher, year-to-date ROI, 3.5. But you do the same thing, right? You take a series average between 2015 and 2019, and you get something that looks like that. You go ahead and hide 2015, and then you hide 2019, and you show 2023. And, I think there's a good chance we're range bound here. Lower side would be about 25% drawdown from the yearly open. Upside potential would be about a 2x from the yearly open. So the drawdown from that, sort of as a function of time here, from the yearly open, let's go figure out what the yearly open was. So 12-month candles, yearly open was at 16,530. So from 16,530, 25% down from there would put Bitcoin around 12K or so. 2x move from there puts it at about 32K. So the point I said before, right? I think you're likely gonna, and actually when we first put out this video on the year-to-date ROI at the beginning of the year, I said it's probably a little bit rich to assume it's gonna go up 2x. But even if it went up to say 25K, it would still be somewhat representative. And so I would say Bitcoin's probably just going to spend most of the year between 12K and 25K, right? And it's going to be a pretty typical year, like recovery year, okay? And I know, I'm not saying that Bitcoin has to go put on a new low. It could be like a double bottom. Could be a higher low, I guess. You look at the context of history. What did we have? What was last cycle? Last cycle was a higher low, okay? So in last cycle, you had a higher low, right? So you had one low here, and then you had a higher low. What happened was 2015. You had a double bottom. So 2015 was a double bottom. Maybe this one will be a lower low, right? Throw us a curveball, okay? Throw us a curveball. Maybe it'll be a lower low. Scare everyone. And then we go up. Look, no one knows what's going to happen. I'm not going to sit up here and tell you that I do. I'm just trying to help people manage their risk. Frankly speaking, a DCA strategy is going to be the most effective strategy, I think, for most people over long periods of time. And if you're going to sit up here and try to identically time the bottom, then good luck. It's not really that possible, okay? Like the likelihood that it plays out how I've outlined is fairly low. It could go to those levels, but it might not go in the same way that you think. And therefore, if it deviates off what you think, and it might cause you to YOLO in at a new local top, only to then watch it finally go back down to what you thought it was going to go to in the first place. So again, as I've said before, I think a DCA strategy is going to be your best approach. Probably 5 years from now, you're not going to really care if you bought Bitcoin at 12K, at 10K, at 15K, or 20K. But in the short term, it is difficult, and I'm not going to try to minimize that. I do think that cash is certainly going to have its moments this year where it's certainly seen as king. I think it's you're coming into those moments right now, and I think that I think the altcoin market's got to get wrecked, frankly. I mean, yes, we have the dominance over here going down a little bit, down to 43. So it's at 43.25%. But as a reminder, and I get it's a desperate reminder. Like, I'm not, I mean, we can talk about it. But as a reminder, excluding stables, which you probably should do, right? Like, there's no reason you can't look at it excluding stables. The dominance is still going up, my friends, right? It's still going higher, 48.5%. It's still putting in higher lows. And you go over here, you look at it, including stables. Yeah, you could say it's gone down a little bit, but I'll also tell you this. I mean, in September it was at 38%. In November it was at 39. In January it was at 40. And then, now it's at 43. And I see the trolling comments, well, how is your Bitcoin dominance holding up? I'd say it's holding up quite well, in fact. Dominance including stables, still going up. Dominance excluding stables, higher lows since May of 2021. And if you want to get really technical, higher lows since January 2018. And you go take a look at most of these alt Bitcoin pairs. Go take a look at ADA Bitcoin in a downtrend, really getting close to putting in some real new lows here, right? Dot Bitcoin in a downtrend. Link Bitcoin, yeah, it's doing a little bit better, but it still is nothing to write home about. You look at it here, right? I mean, it's not that much far off the low. Uni Bitcoin, mostly in a downtrend, right? I mean, it did have a bounce up back here, but it's now started its downtrend. Solana Bitcoin, right? Take a look at Solana Bitcoin. That's one we talked about for a long time. Every single time it puts in a new low, that low becomes sort of resistance on the next leg, higher, so the next pump, right? So this low, once it dumped, it became resistance over here. And then this low right here became the resistance over here. So, eventually it's probably going to dump down here. And then when it pumps up, right, you'll probably see resistance at this level at around 5,000 or 6,000 Satoshis. And it just keeps happening, right? It keeps happening. And every time it pumps, everyone gets excited and says, oh, well, Ben says altcoins are too risky. And then it eventually rolls back over and puts in new lows, not only on their USD pairs, but also on their Bitcoin pairs as well. And then that's how you slowly drain liquidity out of the system, right? You market pumps up for a few weeks, everyone throws their money back in, liquidity is draining up, liquidity dries up, and there's nowhere where else you're going to go. I mean, that's what's happened many, many times so far. I don't see a reason why that's going to change. Now, Ethereum, the elephant in the room, right? Of course, we're going to talk about Ethereum. And more importantly, we're going to talk about the Ethereum Bitcoin valuation. It's now 0.0713. I'm not going to hide from it. But I will say the same thing happened, right? I mean, the same thing happened back over here. Remember, Bitcoin had a rally in January, February, March 2022, and the Ethereum Bitcoin valuation rallied through April. In fact, right? I mean, you can see the monthly candle in April is green. And then what happened in May and June? The Ethereum Bitcoin valuation dropped, 26% or so, followed by hype around the merge. Now, the question is, are we just doing the same thing, right? You got 3 red candles, right? You got 3 red candles here, 2 green candle pump, right? 3 red candles here, 2 green candle pump. And note that this pump over here, actually this one took us to the top of the prior wick high, which was around, you can see where that was. So this wick high was around 0.0727. So hey, maybe it goes there and then pulls back. I'm still going to have to remain stubborn on this. I do think the Ethereum Bitcoin valuation will resolve to the downside. And I think if you zoom out here, it just sort of looks like a massive distribution phase on the Ether Bitcoin valuation, right? Kind of like this one, right? 1, 2, 1, 2. I could be wrong, right? Like I could be wrong. It's certainly possible. And, I'll have to live with that if I am. But I still think there's reason to believe that it will resolve to the downside eventually. And we, as I've said before, I'd like to see Ethereum come back home, frankly. Okay, I'd like to see it come back home. Home, of course, is the lower logarithmic regression trend line. it has eluded us so far. Sort of the fair value down here is right around 781 or so, around 780 or something. What's interesting is we pointed this out before. If you look at the Nasdaq during the .com crash, it actually followed the same price as Ethereum, right? The rally started at 100. Okay, so if you look down here, the rally started at 100. It went up to 4,800. Does that sound familiar with ETH? Right, 4,800. The rally to the 50 week started at 1,100. The rally to the 50 week got rejected at 1,700. Does it sound familiar? Right? 1,700 rejection, double top off the 50-week SMA. Same exact thing for Ethereum. You just wind the clock forward, 2 decades or so. And then where did the Nasdaq bottom? Just below 800. Just below 800 puts you at the fair value fit to non-bubble data, right? It puts you at it. To give you an exact number here, that value is at 790 right now, almost 791. It's interesting how it's basically 790 is essentially where the Nasdaq bottomed in October 2002. And Ethereum could overshoot it. I mean, it could go below it. I think the very deep value zone would be 400 to 600, but I don't know if we're going to see that or not. I'd like to see it, but you might be a little bit too greedy. We'll see what happens here. But there are similarities that I think are worth continuing to follow. And I do think Ethereum will eventually come back home. I don't think it's done visiting these lower levels. And the thing is when it does come back home, assuming it does, if and when Ethereum comes back home, you're going to see me turn very bullish on it. And you're going to be like, who's this guy, right? And it's going to be the same guy that started this channel, in mid-2019, when all my videos were talking about how undervalued Ethereum was and how it was poised to go on a spectacular bull run, And you look at the Nasdaq and you make the comparisons between the Ethereum prices, and look where the Nasdaq's next peak was, right? So this was 4,800. Where was the next one? 16,000. Okay, so I'd like to see Ethereum go to 16K one day. That'd be nice, wouldn't it? But it'd be nicer to go to 16K if you can load up at 600, right? Imagine you load up at 600 and it goes to 16K. It's a 2,500% move. If it just does it from here, it's a 900% move, or even from over here, it's about a 1,500% move if you got this low right here, or if you got the wick a little bit more. But imagine again, it comes down here, it's almost a 3,000% move over a long period of time, of course. But that's something to consider. So, anyways, that's where we stand. The dominance is still a bit too low for my taste to get interested in the altcoin market. I think there's reason to believe the altcoin reckoning is not over, not only on their USD pairs, but also their Bitcoin pairs. And one of the things that you have to remember too is that Ethereum can outperform Bitcoin when Bitcoin's above its 20-week SMA, but when Bitcoin goes below it, that's normally when the switch is flipped, okay? And if it goes below it, normally Ethereum underperforms Bitcoin. I think it's happened every single time. Like every single time from weekly close below the 20-week to weekly close above it, Ethereum's always underperformed Bitcoin. The 20-week SMA for Bitcoin right now is at 19.7. So if Bitcoin goes below 19.7, and you couple that with the all this ETH getting unlocked from the Shanghai hard fork, seems like it could play out. But anyways, what alts am I eyeing? Guys, I'm not eyeing any altcoins right now. Later this year, I'm sure I will be. Maybe by Q3 or so, but I'm not right now. By the way, guys, if you're not subscribed, make sure you subscribe to the channel. Give the video a thumbs up. Remember, we do have Into the Cryptoverse Premium at intothecryptoverse.com. You can check that out. Links in the description below. I'll also put it in the chat over there. Yeah, someone says, I would like to see the dominance go up quite a bit. My guess is that one day it's just gonna start shooting up quite quickly as the altcoin market bleeds back to Bitcoin. I'm sure some people are just gonna roll their eyes at that, and frankly, they have a right to do so. I think I'm not under the illusion that they don't have that natural instinct, but that's still what I think you're just gonna see it just pop higher one day and not look back for a couple years. And then a couple years from now, when the dominance is much higher, let's say 60%, everyone's going to say the altcoin market's dead. And I'm going to be like, no, no, probably time to buy alts, or time to get into alts if you're not already into alts, because the market is very cyclical, and it goes from Bitcoin season to altcoin season to Bitcoin season to altcoin season. Um, Bitcoin's not too far away from sub 20K here. It already went down to 25.38. We're only at 25.43 right now. So, not too far away. If it goes below the 20 week, I think, and gets a weekly close down there, I think you're going to see the altcoin market get very weak very quickly. Um, Again, make sure you guys subscribe and give the video a thumbs up if you haven't. What's someone else what the social risk is? So this is the other thing that I have a hard time believing that we're completely down here. The social risk is still trending down. I would like to see the social risk kind of come back into the 0 to 0.1 risk band eventually. Remember, if it's going to follow .com, then the process that we're in right now could take 6 months. Okay, so if that's the case, then you're going to see plenty of pumps in between, right? 22K, 20K, 21K, 19, right? 2018, 22, 17, right? Like you could have plenty of pumps in between, and it's still not negate necessarily that thesis. Sorry, I'm just trying to read the comments. Normally, I regret reading the comments, but um, someone says, "Not sure I understand the logic of not buying alts when they're 95, 98% down, considering that's where the upside in the market is. At the same time, buy Bitcoin as a hedge. Does that make sense?" Yeah, so a lot of coins are not down 98%. I mean, even Solana went down 97%. But there's still a lot of coins that only have gone down like 92%. I mean, I think the thing is like, if it depends on your horizon. If your time horizon is 5 years, then you go for it. But if you don't want to just watch them bleed back to Bitcoin for a while, then what's the point? What's the point? Bitcoin's likely going to outperform them anyway. It's likely going to lead the next bull market. So then you have to ask yourself, what's the point of getting heavy into altcoins when Bitcoin is likely going to lead the way out of the next lead our way into the next bull market regardless. And so I think that's the biggest question you have to ask yourself. I bought plenty of altcoins in Q3 of 2018 and I got wrecked in Q4. And a lot of those coins recovered because I mainly bought Cardano, Chainlink, that kind of stuff. And a lot of those recovered. But maybe I don't think I got Chainlink that early. But the thing to remember is that some of the altcoins that you might buy, just because they're down 95% doesn't mean they're ever going to see a new high, right? Like some of them will, I think, but a lot of them won't. And that's sort of this survivorship bias of looking back at 2018 and seeing how far some altcoins went down. There's plenty of altcoins that went down 98%, and then after going down 98%, they went down another 50% over the next 2 years. So you can't just use your measure of, hey, it's down a certain amount, therefore it has to go to new highs, right? Like it doesn't work like that. There's a lot of altcoins that won't do that. Bitcoin and Ethereum are your blue chips, okay? In my opinion, Bitcoin and ETH are your blue chips. So I think that's where you start. But just because an alt's down 95% does not mean it's going to go to new highs. Okay, this is a very common mistake I think people make. You can get lucky and pick the ones that do, but maybe you pick 10 different ones and then one of them goes to a new all-time high. And you might say, well, is that not pessimistic? Well, a lot of the coins that existed, like think about it. Like think about like Solana, Avalanche, even Luna, which we know collapsed, right? Polkadot. a lot of these were not even around for the 2017 bull market. And now this last bull market, it's like you vividly remember like these rallying. Okay, so in a future bull market, you're probably going to have new altcoins that are rallying that everyone talks about and everyone cares about. And these other ones might just be a relic of a prior cycle that no one cares about anymore. I'm not saying that's the case for all of them, but you better believe there's going to be some out there that just are not going to be cared about in the next bull market, and it's going to be whatever the next new shiny object is, not the boomer coins from the last market cycle, right? It's just what we've seen time and time again. Remember, Bitcoin and Ethereum are generally here to stay. I mean, I don't really see that changing. We talked about this on NFA Live earlier with Guy and Rob, and I think that my general thinking, and I think theirs too, is that Bitcoin and Ethereum are going to be 1-2 for a while. We might disagree on exactly which one's number one and which one's number two, but I think as a whole, Bitcoin and Ethereum are 1-2 for a while. Do you think the formation of the bottom will come from any bad crypto event or macro related, like fears of recession? You know what I think? I think the bottom is going to occur maybe on a random Tuesday in the third quarter of this year. That's probably when it's going to happen. And it's probably going to happen when no one thinks it's going to. It's probably going to happen when there's no major event surrounding it. It's just going to be a quiet day. And that's my guess, right? Is my guess. It's probably not going to be a major capitulation. Just a quiet day in the third quarter. And maybe a Tuesday, right? Maybe it happens, and then it's gone, and then you start the next cycle, which would hopefully follow the Nasdaq and take us up 3,000% or something over the next however many years. The hardest part is just going to get through this year. Get through this year if you can. The time-based capitulation is the most difficult part. Get through this year. And then next year, I think next year is going to be our year. Okay, so this year, time-based capitulation, we could put in new lows. Don't take it to the bank, but we could put in new lows. Survive, get through it, and next year, I think it's our year. And 2025 as well. And then the main things we have to think about with the next cycle are, is inflation coming back? And if it does, it could temper our expectations for whatever the return should be. But that's my guess. And if the bottom doesn't happen for a lot of the market until the third quarter, like what, you're gonna have what, 5 or 6 pumps between now and then, right? The 2-week pumps, 3-week pumps, it's gonna happen. Doesn't mean that it's not gonna happen. It doesn't mean the bottom's in, but you could certainly have several different short-term rallies just to get everyone excited again. So try to survive the time-based capitulation of the cycle, just like 2015, just like 2019, and I think things will start turning around in later on in 2023, once the halving is more in sight, and once the pivot by the Fed is more in sight, and once inflation is coming back down, which is likely going to happen via a recession. So I think we maybe wrap it up there. Someone says, how can you think that we bottom in the third quarter this year, but also think we start a recession then too? Well, it could be Q4. Maybe we bottom in Q4. But the market bottoms during a recession usually. It doesn't usually bottom at the end of it. And maybe the recession starts in Q2. It could start next month. Okay? I don't know. I mean, I don't. Like, I think one's coming eventually, but I don't know exactly when it's going to start. I don't know how resilient the jobs market is. I certainly would never have expected it to be this resilient. So who am I to suggest that I know exactly when the recession is going to occur? But I do know that the market tends to bottom before the recession is over. And if that's the case, then then why not speculate on it happening before the economy looks like it's the worst it could get? Because the market will probably bottom before that. So that's why. So I would say it'll the worst. I would say that risk assets will likely start to turn back around in a sustained way, Q3, Q4. Okay, could be a double bottom. Could be a double bottom for Bitcoin, maybe. Could be easily a lower low though for Bitcoin too. I think likely for altcoins, very, very likely lower lows on a lot of altcoins. Not all of them. I mean, some of them are well off their lows from June, so maybe those lows are in for those alts. just like just like Chainlink in 2019 or 2018, it bottomed in the summer of 2018. So there's going to be some altcoins that probably already have bottomed on their USD pairs, but the altcoin market as a whole is still likely going to look at new lows. Look at total 3. All right, so this is total 3. This is the altcoin market. This is everything besides Bitcoin and Ethereum. Okay, everything besides Bitcoin and Ethereum. And you can kind of see the pattern, right? Like the you just sort of ping pong around, and then eventually you get that capitulation, right? Same kind of thing, right? And then eventually you get that capitulation. So if this happens, then you know what, maybe the altcoin market will be attractive. But I would say that you really want to see the dominance go up for that to be for me to think that's a viable play. Some videos that I'm going to be doing soon, just so you're aware. We will do an update to the worst case scenario, but it's going to be really repetitive. So if you've seen it before, you probably don't need to tune into that. And maybe you shouldn't, because I'd like to see the social risk go down. So maybe just go take a vacation from crypto for a few weeks. The other thing is I will put out another bulls versus bears video. I know some people have asked for that, and because the last one we did was several months ago. And I think it's worthwhile to revisit that and try to look at it as unbiased as possible. Okay, so to not only look at the bearish indicators, but to also look at the bullish ones as well. Try to weigh them as much as we can, and try to just come to a conclusion. So we will be putting out a bulls versus bears video probably in the next few days, and then we'll revisit the worst case scenario. Maybe the worst case scenario video update is a little bit premature, but sort of what I'm thinking is as that potential outcome becomes increasingly likely, we should probably discuss it more, just to try to stay on top of that potential outcome. But anyways, yeah, I know. I was listening to Powell in front of Congress. They talked about crypto. How much? Like so much, right? I think we're in the then they fight you phase, right? They talked about crypto so much, and I do think regulation is coming, and I think it's going to take a big hit on the cryptoverse, but will likely become stronger after it, and hopefully we can grow to new heights. So with that, I think we'll wrap it up. Make sure you guys subscribe. If you're not subscribed, give the video a thumbs up. Again, check out Into the Cryptoverse Premium at intothe.cryptoverse.com. Someone says, can you do house TA for ETH coming home? Of course we can. Of course we can do that. So here's Ethereum. Here's the regression band. And we will draw our house and our garage. And then we need to draw the chimney, though, so it has a place to escape to, right? So, yeah, I'm hoping we'll see Ethereum sort of come back in here and knock on the door, go inside, and then maybe blast out through the chimney. That's the dream. Anyways, if you guys like the content, make sure you subscribe, give the video a thumbs up. Into the Cryptoverse Premiums at intothecryptoverse.com. We also have a free tier, so check that out. Free newsletter every single Friday. I believe you also get access to like one chart via the website. And I will see you